standstill as thousands of dock workers begin their first large-scale strike in nearly 50 years. A digital boost for Greater Manchester as work begins on a new £350 million data centre. Hello there, very good afternoon to you. This is Business Live with me, Emma Crosby, and we start today with the escalating conflict in the Middle East and how fears of an all-out war in the region are spilling over into the business world. Rising nervousness about geopolitics has pushed oil prices higher by as much as 3% in the past 24 hours, with Brent crude at one point topping $75 a barrel. The commodity gold, seen to many as a safe haven amongst many investors, is now also trading at near record highs. Well, let's have a look at those numbers in a bit more detail for you, because you can see the spike on the right of your screen here, where oil prices shot up today following Iran's missile attack on Israel last night. Iran is the third largest oil producer within OPEC producing countries. It totals around 3% of the world's oil outputs, and there are increasing concerns over how a wider conflict could affect its production and also the output of neighbouring oil producers. But if you're looking at the year chart on your screen now, you see it's been a pretty volatile year with recent periods of falls. They have been fueled by concerns over weak demand coming from the likes of China. And if you remember as well, we had that news from Saudi Arabia last week signalling that it's preparing to increase supply. That also hit prices further. If we have a look at gold for you now, this is a chart of what's been happening to gold prices over the past year, sitting at near record levels as fears of an all-out war in the Middle East support this safe haven commodity. Currently, looking at today's prices, a barrel of Brent crude will cost you $74.07, so that's just off those 75 mark, but still trading higher by 0.7%. Quick look at gold as well for you now. I'll get that live price for you, and it's coming off those highs, trading lower by nearly 0.6%. Onto the wider markets now. Let's see how the European stocks are going into the close. They were up at one point, but they're now coming off. As you can see, it's a sea of red out there. Energy stocks and defence stocks have done well today on the back of rising oil prices and, of course, geopolitical concerns. And if we have a look at London in more detail as well for you now, the FTSE 100 going to the close pretty flat, trading up just 0.2% at 82.92. Again, the big energy stocks and industrial mining stocks were certainly at one point pushing this index higher. Trading well underway in the United States. As you can imagine, the Nasdaq is trading higher by 0.4%. There is some caution, though, as you can imagine, regarding what's happening in the Middle East. And have a quick look at how the currency market is faring as well at this hour. It is a mixed picture. The pound trading lower against the dollar, but higher against the euro. Pretty flat, though, there at 1.20. More analysis for you. I'm joined now by the portfolio manager at Newton Investment Management Group, Georgina Cooper. Georgina, good to join us on this hour, given what's going on in the markets at the moment. And let's start with the price of crude rising today. I mean, how much do you think that's been driven by geopolitical concerns?
Yeah, I mean, the fact it happened overnight in light of the sad news that we've seen unfold in the last 24 hours, there is no doubt that the reaction we've seen today is in part due to the geopolitical events unwinding. I mean, I guess it's probably worth putting it into context, however, that the oil price, whilst having risen today, has been pretty weak for the majority of this year, certainly coming down from the highs, 2 years ago now, when Russia first invaded Ukraine. And that's probably because you've got a lot of dynamics unfolding as well as the geopolitical risk. You mentioned earlier from the supply side, there's threats from Saudi that they may increase their supply later into this year. And then on the demand side, demand has softened a little bit into the outlook that the global economy might be slowing. Similarly, up until last week, China has been an area of soggy demand, and who knows whether the stimulus that we see ahead of us is going to be enough to reignite that demand.
And we talked about when Russia invaded Ukraine some 2 years ago. I mean, oil was nearly at $120 a barrel, maybe even higher than that at one point. And so it's a very different picture now. I suppose what happens if, it escalates in the Middle East? Let's hope it doesn't. But if it does, and Iran, as we saw, is the third biggest producer within OPEC, what could happen to oil if Tehran gets a direct hit?
Yeah, I mean, as you say, it's the third biggest contributor to supply. So there is no doubt that supply-demand dynamic would change somewhat. I guess it depends what happens to supply elsewhere. If Saudi still turns on the taps, then that could help to keep the pricing down relative to what we saw 2 years ago. But yeah, it would naturally be a fair assumption to think that the oil price could rise further from here.
OK, and what else is catching your eye right now?
I mean, we've had a few results overnight. Nike, for example, reported soggy results. They've withdrawn their full-year guidance. Clearly, they've had a little bit of a challenge in the last few months. We've got a new CEO that's just been appointed. But with all consumer brands, these brand turnarounds take a long time to come to fruition, and the competitive backdrop is severe at the moment. You've got the likes of Adidas, who have, in contrast to Nike, got a really strong product portfolio at the moment, and they're seeing really great brand momentum, and that is no doubt at the expense of Nike in the short term. And yeah, I mean, whilst there's a new CEO, which could be seen as a positive thing, these turnarounds tend to take quite a bit of time. So it's not surprising, really, to see that he's withdrawn guidance and they've delayed their capital markets day whilst he gets his feet under the table.
Yes, they said it was a sprint. Oh, no, sorry. They said it was a marathon, not a sprint. I have to get that one right. Kind of makes sense, doesn't it? Thank you so much, Georgina Cooper, joining us there. Well, let's go to the United States now, where East and Gulf Coast dock workers are beginning their first large-scale strike in nearly 50 years, stopping the flow of around half of the country's ocean shipping. The walkout began after wage negotiations broke down. Now, analysts say it could cost the economy billions of dollars a day, threaten jobs and potentially stoke inflation. Joining me now is the chief analyst at Zanetta, Peter Sand. Peter, thanks very much for joining us. And can you just give us a sense of the sheer scale of these ports and how influential they are?
They are hugely influential for a lot of cargo coming into to America, and it ranges from perishable goods. Bananas is probably one of the first things that the consumers will be missing, but also furniture and machinery for the automotive industry, assembly lines. So it's a massive gauge, and we have right now 120 ships heading for the strike-hidden ports. So you can imagine the line of ships that will soon be waiting for discharging of cargo.
I heard that it could cost the US economy $5 billion a day. Does that sound about right to you?
Well, you can put a lot of numbers to it. I heard anything from $500 million to 30 billion. So, but without doubt, this is massively costly and massively disruptive for just-in-time supply chains that work so well without disruptions like this. So it's costly to the American economy the longer it goes on, and it's costly for consumers and importers, and very, very troublesome also for the carriers that will see a disruption to their networks.
Also, people concerned about inflation. We know that the US Federal Reserve, the central bank, they're getting inflation under control. This comes along and could ruin their plans. Are you concerned about inflation?
I think you should look at inflation from a perspective of what does it mean to the individual commodities. So obviously there will be a need to pass on higher wages like this on low profit commodities and low priced commodities, whereas perhaps importers may be able to absorb a bit more of these higher wages at some point in time for higher profit and higher margin commodities. But of course, it is a move in the wrong direction at this point in time. It's no good to see inflation higher.
You mentioned just-in-time supply chains. The pandemic threw supply chains out the window, didn't it, 2 years ago? Are supply chains more resilient now, briefly, because of what happened in the pandemic?
Yes and no, I would say, because shippers have and American importers have, to a large extent, front-loaded, basically filled their inventories with goods as much as they could possibly do to avoid, say, massive, empty shelves and rundown of inventories during a time like this. But there's a limit to which kind of, say, commodities and products you can front load and put in storage. As mentioned before, I mean, just in time goods like perishable goods and also pharmaceuticals that are often dealt with in refrigerated containers will definitely be ones that will now find alternative routes. Some will be flown in via air, and some may even go the long way through the Panama Canal, calling US West Coast ports.
Okay.
Expensive and cumbersome.
Sounds it. We'll leave it there. Thank you for joining us, Peter Sand.
You're welcome.
Let's have a look at some of the business stories making the headlines today, including Starling Bank. It's been fined £29 million for failings over financial crime controls. The Financial Conduct Authority called them shockingly lax and said they were left wide open to criminals and those subject to sanctions. The watchdog says 54,000 accounts were opened for 49,000 high-risk customers between September 21 and November of last year. JD Sports says it outperformed in what it called a challenging market with rising sales this year. The sportswear giant reported a 6.8% increase in total revenues to £5 billion in the 6 months to August compared with the previous year. But it says its pre-tax profits were impacted by closing down a warehouse in Derby earlier this year. And a long-serving former Harrods executive has pulled out of a move to become the boss of the department store Fenwick, despite being due to start this month. Nigel Blow worked at Harrods between 1992 and 2007, when the luxury London store was owned by Mohammed Al Fayed. Still to come this afternoon here on Business Live, a digital boost for Greater Manchester as work begins on a new £350 million data centre. We're going to hear from Andy Burnham and the KO Data's chief executive. That's coming up next. Don't go away.
I'm Stuart Ramsey, and I'm Sky's chief correspondent.
Enormous explosion that's just come down. I think it was a monster just landed in between us.
Hundreds and hundreds of people hoping to get north, ultimately to get to the United States. It's a border where they're not welcome, yet they keep coming.
We saw snatch squads going in, grabbing people, taking them out and putting them into trucks and taking them away.
They make about 50 kilos of fentanyl a week. It's incredibly dangerous and toxic stuff.
There's been an upsurge in deaths. The fighting between the gangs is getting more and more vicious.
Is this now all your territory?
Yeah. The battlefield is outside the barricades, which is over there.
This is much more like a normal town.
It's really sending a clear message that Venezuela is eager for change. We're being crushed.
Free from wherever you get your news. We are in the middle of a forest, in a jungle really, and they're attempting to keep these men alive. This is real, hardcore emergency medicine. The information on this could bring down the entire network, not just in Iraq and Syria, but across the world. Sky News, the full story first.
Well, hundreds of thousands of people have been using the beast for years to traverse Mexico, but it is really dangerous. Many people have died riding it.
This conflict. They keep telling us that they want aid. And this is what's left of it.
Heavy vehicle.
Why only in America?
People want their country to work.
You want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes. Sky News, the full story first. Free wherever you get your news.
I say, bring it on.
With America divided and tensions running high, get ready for an election like no other.
Join our teams as we follow the campaign trail as America decides.
We will win, win, win.
Get closer to the action this US election with full reaction and analysis.
Sky News, the full story first.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
Traveling is not just about the destination. It's also about how you get there. Fly Emirates, fly better. Fly Emirates, fly better.
Hi there, welcome back. Now, data centres have become an engine of modern life, helping to power our mobiles, computers and, of course, the digital economy. They are key to enabling growth in artificial intelligence and have also been classified recently as critical national infrastructure by the British government. Investment has often gone to the south of England, but a leading player, KO Data, is putting £350 million into a new site in Stockport. Now, a little earlier today, I spoke to KO's Chief Executive, Doug Lowy, along with Greater Manchester's Mayor, Andy Burnham. And I began by asking how far this goes in making the region a leading digital centre.
I set the goal when I came in as mayor to make this the UK's leading digital city region. And we've been the fastest growing digital and tech hub in Europe in the last 7 years. But this is crucial if we're to go to the next level. This supports the next wave of growth in AI and other industries in Greater Manchester. So we're really proud to be partners with KO Data and bringing through the first large-scale data centre here in the northwest of England. And
Doug Lowy, you, of course, are the CEO of KO Data. You're investing £350 million in the site that we can see behind you there. I mean, there is a lot of regional centres in the UK who are vying for your business. So what did Mr Burnham have to offer you for you to choose Stockport?
Well, without a doubt, already much of the infrastructure is in place here in Manchester. You've got a great power source, you've got great people talent, and also this is one of the crossroads in the UK for excellent connectivity. So it's just a natural point for us to be able to accelerate the success KO Data has had in places like London and in Harlow, where our traditional AI roots have been. But this is just an absolutely natural next place for us to provide that digital infrastructure momentum for places like Manchester.
And Andy Burnham, you know, the likes of Amazon, Google, Microsoft are all putting billions of pounds on the table to also invest in data centres in the UK. Can you give us an idea of who else you're talking to? Because obviously you don't want to stop here.
No, we see this as I say, building a innovation-led digital economy for the north of England in the 21st century. This is the kind of capacity all of those companies need, as well as our research institutions, the University of Manchester. So, you know, obviously we're open and we're talking to people. We've got a city centre that's unrecognisable. I don't know if you've been recently, Emma, but you know the dramatic skyline of Manchester changes all the while. So we've got that growth in our city. But then we've got, obviously, boroughs around that have former industrial sites, like the one I'm talking to you from now, where we've got the space to house those data centres to keep that growth coming to Greater Manchester.
Yeah, I enjoyed reading the white paper that KO Data have put forward, Andy Burnham. They talk about Manchester economy booming. Literally, they say the economy is booming, the region is ready. And that's in stark contrast to the mood music that we're getting out of the Treasury right now. We hear Rachel Reeves talking about a £22 billion black hole and pain is to come. Do you think the government are in danger of talking down the economy at all?
Well, it's why I was at Labour conference pointing to what is happening in Greater Manchester now. We are growing faster than the UK economy. I've not been able to come on Sky and say that in the vast majority of the time that I've been in politics, certainly not in my lifetime, because the north-south divide was getting bigger in those years in the 80s and the 90s. But that's not the case now, and this type of investment sets us up for the future. So I would be saying to the government, you know, the investment brings the growth, you know, it brings the hope as well, and that brings even more growth. So we'll be making that argument as we go towards the budget on the 30th of October. As Doug said, Greater Manchester is ready to go. It's ready to bring the growth that the UK needs and the North needs, and I hope I can persuade the government to allow us to go to that next level.
And Doug, back to you now. The UK recently designated data centres as critical national infrastructure along the lines of emergency services and also healthcare. I mean, you say that's a great first step. What's next, would you say?
Well, actually, by having that designation of critical national infrastructure, it's now accelerating the Manchester momentum that KO Data has in moving this forward. We're now seeing that, you know, customers that have enjoyed using our data center services in London are saying, we need to distribute that compute. We need to be able to get closer to renewable sources of power. We need to get to tap into other wonderful, you know, universities and ecosystems of people. And Manchester is an ideal location for that. And so our plans are already robust. We already had many customers lined up that want to be in this data center when it opens up in less than a couple of years. And the reality is their customers have lined up and they're saying they'll take the lot.
Andy Burnham, we know that relies very much on connectivity and also the likes of good rail links and good road links. We know your opinions already on Greater Manchester's struggles when it comes to rail links and road links, particularly with the scrapping of HS2. I mean, how confident are you as we look to the budget at the end of October that you will get the finances you need to improve connectivity in Greater Manchester?
Well, I'll keep making the argument, Emma, because we've got the growth, but we've got to keep it going now. We've got brilliant digital connectivity, and that's one of the reasons why KO Data are here, but we do need to keep working at that transport connectivity. I'm building the biggest London-style public transport system here called the B network, and it will go fully to the London principle of tap in, tap out, and the cap on fares in March next year. So that's coming within the city. But as you say, we need that connectivity between ourselves and Birmingham and Liverpool. And I do say to the government, if we think that the West Coast Main Line in its current form and the M6 in its current form can cope with our transport and mobility requirements going into the 21st century, well, I'm going to say that that's not going to be the case. Both of those pieces of old infrastructure will become barriers to growth. They'll become anti-growth policies if we're not careful. We need to see that commitment to physical infrastructure, bringing the north of England closer together, and it's why myself and the Mayor of Liverpool are chairing a Liverpool-Manchester Railway Board to make sure we actually do get that connectivity. So, yep, we're not going to shy away from making those arguments as we get closer to the budget. If you invest, you get the growth. You can't get the growth without it.
Well, let's turn to the Global Cybersecurity Forum in Riyadh now. Speaking to the President of Identity and Network Access at Microsoft, I began by asking whether the current conflict in the region is spilling over into the cyber realm.
We've seen that nation-state-sponsored cyber attacks has been increasing ever. And that really calls to actually, you know, for all of us cybersecurity practitioners, if you will, is how do we then, you know, collectively work together to think about, you know, from our products perspective. That's why we launched the Secure Future Initiative, Microsoft, where you think about how do you apply the secure by design, secure by default. The ongoing security operations is really important.
And just go back to those threats. How would you describe them right now? I mean, where are the state actor threats right now?
I think that there are very sophisticated state attacks. But frankly, I would say, you know, even just some of the basics, right? Like how do you turn on, you know, identity-based attack is still number one. And frankly, attacking your credentials, you know, trying to phishing your passwords and a password attack is still number one. So I would say the basics we haven't quite nailed. For example, how do you turn on multi-factor authentications? You know, how do you not use simple passwords? How do you not try to share credentials between accounts? So these are the things I think we must do. But at the same time, we also have to, you know, innovate, use Gen AI, use machine learning, use AI to, you know, to tackle the more sophisticated cyber attacks at the same time.
Is it the usual players, the likes of Iran, Russia, China, which are up to no good?
I think there are definitely the usual players, but as we all know, cyber attacks, you never just rest. You're always trying to monitor the entire threat landscape on an ongoing basis across the globe. And to us, it's very much about how do we have all the signals, but also how can we create our products that's secure by design, by default, so that we can protect our customers at the same time, but also give them the best user experience, because we think security, productivity really go hand in hand.
And Joy, I want to ask finally about the US presidential elections happening in November this year. Of course, there are huge concerns about online and cybersecurity featuring in the 2016 and also the 2020 elections. Do you think this year's elections will face similar challenges?
Seeing, cyber attack has been ever increasing. I mean, definitely, election year is top of mind. And this is why we've been continuing working with government agencies, both the US and across the globe, try to both monitor the threat and continue to use the Secure Future Initiative as an example to continue to defend and hardening our environment.
Joy Chick speaking to me earlier. That's it for me. I'm back again in Business Live tomorrow at 11:30. See you then.
I say, bring it on.
With America divided and tensions running high, get ready for an election like no other.
Join our teams as we follow the campaign trail as America decides.
We will win, win, win.
Get closer to the action this US election with full reaction and analysis.